Welcome to Buy, Hold, Sell. My name is James Marley. I'm joined by Phil Parker from Altair and Simon Bonouvrie from Cadence. We're talking about stocks that can benefit from some of the new trends in the Australian economy. Simon, I'll start with you. Had a good half-year report, faces the Chinese middle-class Treasury Wine estates.
I like this stock. It's trending higher, so the momentum's with it. I'd say they just made a good acquisition in the US, a wine business. It's largely a play on the Chinese consumer, selling high-end wines into China, and also a play on the US dollar. I think it's got a lot going for it, and so I'd have it as a buy.
It's a buy. Phil, Treasury Wine, is it one you like?
Yeah, from a winemaking family originally. I'd probably have it as a hold. I think we're probably again at one of those top of the cycle trades. They got through the inventory control issues. I still see some major issues going forward with that over time. I don't see that going away anytime soon. It's just the nature of the beast. I think you can buy stocks that are going to get you a better bang for your buck.
Okay, just a hold.
Yeah.
Apartment construction and infrastructure spend. Lease has got great exposure to that sector, which has been on a bit of a tear. Buy, hold, or sell?
Well, we don't own the stock, but I suppose if we were to give a view, we'd probably say hold. 41 billion pipeline. Seems to have dug itself, excuse the pun, out of a few issues they had a few years ago. Not in our portfolio, so hold.
Okay. A good pipeline of work coming through, Simon. Buy, hold, or sell?
For me, it's a hold. I'm always cautious on developers and construction companies because often the accounting profits don't match the cash flow. And I think with Lease, look, it's a fantastic company. However, like over the years, that's happened a few times where their accounting profit hasn't matched the cash flow. And I'm also cautious on companies that have a real flagship development, and there's always the potential for something to go wrong. The other thing is, and I'm talking about Barangaroo, the other thing is their dividends unfranked. So, I'd be in these property stocks for yield, and it's an unfranked yield of 4 to 4.5%. So for me, yeah, it's a hold.
Simon, one of the big themes has been the consumption of mobile data and internet services. It's been a hot sector. Vocus, buy, hold, or sell?
For me, it's a buy. They recently announced a merger with M2, and prior to that with Amcom. I think the sector's been racing to consolidate, and now Vocus is a fully vertically integrated company. So I think what you'll find is the synergies they'll get from the mergers they've done will exceed expectations, and the earnings growth on this stock will probably be sector leading. So for me, it's a buy. Okay.
Phil, it's certainly priced for growth. Is it a stock you like?
So we've probably got that on a hold again. We don't own that stock. It's made some pretty big acquisitions. We've seen this before in the smaller end of the telco sector. I've got old enough grey hairs to remember some of the big ones that failed. I think we probably wouldn't get involved unless the multiple came off and we saw, a real sort of solidity in what they were going to do with trying to get synergies out of the business.
Okay, well, let's try and get an idea out of you. Is there a stock that you think has got good prospects given the outlook for the Australian economy at the moment?
So we actually like CALTEX in terms of its the way it's turned the business around. So the philosophy for us is all about change. We think it's changed its spots. Had a win in what was left of its refining business up in Lytton. With the price, that's sort of slowed down a bit. But then if you look at what they're doing for the consumer-facing side of the business, they're trying to rationalise the sales out of that area, trying to grow that franchise. We think they're going to do it. We think they look incredibly good value at this point.
Okay, Simon, what about you? Have you got a stock that can grow in the current environment?
Yeah, one stock that we own that I think is a good one is IPH. And they listed last year, and they're an intellectual property firm. And they're basically consolidating the market in their space at the moment. They've made a number of acquisitions here in Australia, and they've indicated they're going to look up in Asia for further acquisitions. So basically, this company files patents and trademarks for companies coming to Australia and also Australian companies going offshore. So we think this is a company that can grow regardless of the pace of the economic environment, and they're consolidating the marketplace, and they've got $100 million in cash to spend on acquisitions, so we think there's some good earnings growth ahead for this stock.
Okay, well, a couple of opportunities for stocks that can grow even amidst a muddling along economy.